I added some QQQY today, and there's a reason I did it, not just because it was down, but because it's possible it could bounce from here, and I want to make sure that I get every opportunity I can. This is Mike, the tactical stock scalper. All right. So, what we see, markets are very interesting today. We're going to go over some charts, but first, we're going to talk about why I added QY today. So, I added QY today, number one, because we are coming down to this 20 period moving average that you see in white. And as you see, it bounced off there. We have two levels of support here. We have the gap fill up there that you see at the top, and that will be our, we have this gap right here, right? The first level of support of a gap is that area at the top of the gap. And as you see, we're bouncing off of that currently. So for now, for today, for right now, this was the play to make, was to average down here. Now, the next level of support, if it breaks through this 20 period moving average and a gap and goes down to fill this gap, would be around the 378 area roughly on the Qs, and I would probably average down there again. I'll just have to wait and see, because if it goes a little bit lower, we're going to go to 375 and the 50 period moving average that you see in green. But how we'll know if this is going to hold or not? So we have a touch, right? You see how this candle today on the Qs is touching the 20. If tomorrow's candle holds the 20, right, just stays right there, that means we'll possibly, odds favor going back up. So we will have to see what happens. I do expect a pullback, and we'll just have to see. The market doesn't care what I think, but that's just what I'm looking at and making a plan for one direction or another. But Padma asked about the gaps, and all gaps get filled, right, on these markets. It's just a matter of when, right, not if. So for instance, there was a gap way back here, right? Well, it got filled right through there, correct? You see that? Now we have gaps right down here on the Qs. We have another little gap right there, and of course we have this, doggone it, we have this much larger gap up there. So we'll have to see if that does get filled or not. But playing gaps is a good way to find support, or if you're going in the other direction, a good way to find resistance. Let's look at QY today. And this, I want to talk about this again. Padma also asked me about missed opportunities through here, because I was in a couple Discord servers and I talked about how I am not buying any QY through this run up. And she's like, well, isn't that a missed opportunity? No, absolutely not. Because as you see here, if I would have added up here, it would have been way above this cost level. So we know with these types of funds, we get a guaranteed dip every month, right? So with that being said, we got a guaranteed dip, not just a guaranteed dip, but what do we have here? We have a red day behind it. So that means for me, in order to keep my cost basis low, which I think is extremely important with these funds, I wait for bigger dips to average in. So it's definitely the right move to not add QQQY during this run up, but rather be patient, wait for X date, right? And then add shares here. Now I only have 130 shares, but guys, I have full belief in these funds, and I am now going to be adding in probably pretty heavy over the course of the next 2 to 3 months. I just need the market to dip so I can add in at a lower cost level and get more shares and make more money in the future, right? So that's why I'm doing that, and that's why I'm averaging down at these levels, because of the gap that we saw on the Q. Let's look at SPY and the S&P. So what we saw, one more time, I want to show you the Qs. Just 1 second, I want to compare this to you. Okay. The Qs are down, right, as you see there by the red candle today. S&P, we're going to use the SPY to help gauge the S&P, is still flat and still consolidating. When we have a long consolidation period like this, that means a dynamic move is going to come out of it, either up or down. Of course, I'm thinking down, which is why I'm keeping the majority of my money on the sidelines, waiting for this dip. The Qs is leading the markets currently, up and down. Like when it goes up, the Qs lead the charge. When it goes down, what happens? The Qs lead the charge. Let me show you something else. IWM is still up there. So will it also follow the Qs? We'll have to see. But as you see, just like we have the long consolidation with SPY or the S&P, we have a long consolidation period through here with IWM. And what happened? A dynamic move came out of that. This one just so happened to go up, right? So we don't know which way these dynamic moves are going to form. We just know that they will, right? So here we are consolidating on the S&P. What will this dynamic move be? We will have to find out. Let's look at IWMY, and then we're going to look at Tesla today. Let's go to a little lesser chart here. Let's go to an hour-long chart. Okay, so I am not adding to IWMY yet. I'm waiting to see if we get a bigger dip from the markets, if everything is going to follow the Qs down, or is it just a fake out from the Qs and everything else is going to go back up? We will have to see. But I averaged down on IWMY after the div drop, and then now I'm just going to wait and just see what's going to happen. I'm going to be slowly building in to this position as well over the next 2 to 3 months and going in pretty heavy. But I'm just going to wait and be patient and get my average price down and let the market dictate. Okay, let's look at Tesla. Let's go to Tesla on a daily. What do we see here? Same with the S&P. A long consolidation period. There will be another dynamic move coming for Tesla. Up or down, who knows? But we do know this, that 230 is serious support. Look how it has not been able to break 230, nor has it been able to really break 250 on the upside. So Tesla is just consolidating and going to make a dynamic move. Who knows which way it'll go. If it does go lower, which I am leaning on, we have a gap to fill right there. And so the next support would probably be roughly 220 if it breaks 230. And then after that, we're looking at 210 and the 200. So keep an eye on Tesla and keep an eye on the 230 level on the downside and 250 on the upside. If it breaks 250, see, here's a gap here from way back then from the earnings that got filled already, right? So no more gaps to the upside. This gap got filled a long time ago, so we are waiting to see. But if we take a zoom out on Tesla, all we've done is make lower highs this whole year. Is that trend going to continue? Well, until it breaks it, I would have to say yeah, because that's what it's doing. The market, the market and stocks are either bullish or bearish until they aren't. Currently, Tesla is still bearish, waiting on a break of 230, but we'll see what happens. Hope you enjoyed the content. This is Mike, Tactical Stock Scalper, out.